Okay, so let's get right into it. If you've been anywhere near the crypto market this January, you've probably been feeling some serious whiplash. Prices are all over the place, and that really strong optimism we saw at the end of last year, it feels like it's hit a brick wall. So in this explainer, we are going to break down what is actually going on and why things have gotten so volatile so fast. Here's the game plan for today. We're going to start with the big picture, this January storm. Then we'll zero in on the 4 key things that are causing it. We're also going to do a deep dive on something called token unlocks, break down how a flash crash actually works, and then we'll wrap it all up with the super important price levels that everyone is watching right now. All right, let's kick things off by just taking the temperature of the market. Because, before you can understand why prices are moving, you really have to get a handle on the psychology, the human emotion that's driving all the decisions. This is the big one, right? This is the question that's on everybody's mind. Are we just looking at a little dip, a healthy correction, or is this the start of something, well, bigger? And the truth is, there's no simple one-word answer, because it's not just one thing. It's a bunch of different factors all hitting at the exact same time. And this right here, this number, 41, it perfectly captures the mood swing. The crypto fear and greed index just dropped into fear territory. It's a huge shift from the neutral and even greed we were seeing before. This is basically a flashing light that says investors are getting nervous. They're starting to sell, take profits, and that fear can become a self-fulfilling prophecy. It just feeds on itself. So what's behind all this fear? Well, a lot of analysts are calling it a perfect storm. And that's a great way to put it. There's no single bad guy here. Instead, you've got 4 completely separate issues, 4 different pressures, all squeezing the market at once. Let's quickly run through them. First up, you've got regulatory setbacks. A really important pro-crypto bill, the Clarity Act, just got stalled in the US Senate, and that's kind of put a damper on things. Second, massive token unlocks are literally flooding the market with new coins to be sold. Third, we have macroeconomic headwinds. The Fed is making noise about keeping interest rates higher for longer, which makes risky stuff like crypto look less appealing. And finally, institutional outflows. The big money is pulling back a bit, with Bitcoin ETFs seeing over $243 million pulled out recently.
Okay, now out of those 4 big triggers, I want to really focus on one that's super powerful, but also, honestly, a little misunderstood, and that's the token unlock effect. So let's take a closer look at what that actually means for the market.
So what in the world is a token unlock? It's actually a pretty simple idea. When a new crypto project starts, a big chunk of its tokens are usually locked away. They can't be sold. These are for early investors or the dev team. An unlock is just the moment that the lock comes off, and all those tokens can suddenly be traded on the open market.
And here's the crazy part. The effect is incredibly predictable. Research shows that about 90% of the time, that's almost always, a token unlock pushes the price down. This is not just a coincidence, it is a clear, consistent pattern. You know a flood of new supply is coming, and the price reacts.
But why, though? Well, it boils down to 2 key things. First, there's the direct supply shock. You have early investors who bought in for pennies, and now they can finally cash out and take their profits. Plus, the teams themselves often have to sell tokens just to pay their bills. Second, and this is maybe even more powerful, is the anticipation. Smart traders see the unlock on the calendar, they know the price is likely to drop, so they start selling before it even happens to get ahead of the game. And of course, that selling causes the price to drop.
Now, it's also important to know that not all unlocks are the same. You've got what's called a cliff unlock, where a massive batch of tokens gets dumped onto the market all at once. That's like opening a floodgate, total chaos, high volatility, and usually a pretty nasty price dump. The other kind is a linear unlock, where tokens are released slowly, a little bit at a time. This is way more stable, because it gives the market time to absorb the new supply without panicking. And here's where it gets really, really interesting. It also matters a whole lot who is getting the unlocked tokens. Look at this. When the project's own team gets their tokens unlocked, the price tanks by an average of 25%. That is a massive hit. Investor unlocks are a little more moderate, but check this out. When tokens are unlocked for the ecosystem, for things like community rewards, it can actually be a good thing for the price.
Okay, so unlocks are a huge piece of this puzzle, but sometimes they're just the thing that kicks off an even scarier event. To really get why a small price dip can suddenly turn into a full-on flash crash, we have to talk about something called a liquidation cascade.
The best way to think about this is like a line of dominoes. It all starts with one small push, a little price dip from an unlock or some bad news. But that dip triggers automatic selling for traders who are using leverage, borrowed money.
That forced selling pushes the price down even more, which then knocks over the next, even bigger domino, triggering another wave of liquidations. It's this vicious cycle that just feeds on itself, and it can send a price spiraling down in minutes.
So with all these things happening at once, you've got regulations, unlocks, these liquidation risks. What are the most important things to be watching right now? Let's get practical and look at the critical price levels for the two biggest assets in crypto.
All right, for Bitcoin, the big line in the sand is around $95,000. It is really struggling to stay above that level. If it breaks below, a lot of people think we could see a pretty quick slide down toward the $88,000 mark. Now for Ethereum, the key support level is $3,165, and the stakes here might be even higher. A drop below that level could trigger over $1 billion in liquidations. That's billion with a B. That's the cascade effect we were just talking about in real life.
Which really brings us to this final thought. When you have regulatory pressures, supply shocks from unlocks, and big economic uncertainty all happening at once, it becomes so clear just how complex this market is. And it makes you wonder, with so many different triggers that can set things off, is wild volatility the only thing we can actually count on? If you want to keep making sense of complex topics just like this one, make sure to like this explainer and subscribe for more.